The market breaks down as expected. Is it time for a bull revival? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that we had moved down to the bottom of the pivot, and we were expecting the market to follow through to the downside to at least 43.88, and that's exactly what we saw. The market broke through 43.88 and now sits in a bit of no man's land, but we are looking for a bull revival. I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, we continue to kill it in our room. We understand the market. We understand the targets and the turning points and where and when to use them. We killed it with our trades today, as you can see on the screen. Everybody's very happy. If you'd like to join this winning team, please stay tuned for later in the video. But for now, let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And as we talked about yesterday, once we got this 1-2 setup that came down and broke the 618, I said it was highly probable that they would continue down through the pivot at 44.25 and on down to the 43.88 area, which they did. And now they have pushed through that just a little bit. Our next target down is the 43.50 area, the 1236, which is the most common wave 3 of 3 target. So we would expect to come down and hit that area. From there, we would be looking for a bounce. Now that bounce is actually going to be pretty important because once they bounce here, since we are below the pivot, we have really clear parameters. If they get down to here and bounce, or wherever they bounce from in this area, but I do believe 43.50 will be the zone, and I'll show you why in just a minute. Once they come down into this area, as long as the bears can hold under 44.48, 44.50 area and continue to push down, we are bearish down to 42.92. I'm sorry, 42.34. If the bulls can come back up and break 44.50, then it becomes a lot more likely that we're in one of two scenarios. One, the move down is over and we're going to start moving back toward all-time highs if it's an impulsive move higher. So if we see a break of the pivot in 1, 2, 3, 4, 5, then it's going to look like we're headed back towards all-time highs. If the bulls can break the pivot in an ABC type manner, where we get A, B, and C up, then we'd look for another C leg down toward about 4,200 to complete the move down, and then we'd look back to all-time highs. So this is a very critical point in the market where the bulls and bears both have clear parameters. The bears need to keep it under 44.50. The bulls need to get it over 44.50, and how they do that, if they do that, would be very telling. Now, once you hit the 1, 2, 3, 6, that does give the bears the advantage, and quite frankly, breaking the 1.0 tells me the bears are in control of the market until the bulls can prove otherwise. Now, why 43.50 is such a big deal? Yes, it's the 1, 2, 3, 6, which is a very common wave 3 of 3 target, which we would expect to hit. But if we jump over to the weekly chart real quick, okay, what we see is the 21 moving average, which is a very critical moving average for support. You can see they come down and hold it here, come down and hit it here, come back up. Now they're coming down to test it again. This is what the market follows. It comes back and touches it. It never gets too far away. They're very likely to come and touch it since they got so close, which is also right at 42 or 43.50. It's right at that 43.50, 1, 2, 3, 6 number, as well as you have support from the top of the August high of last year. So a lot of support in that 43.50 area. I don't expect the bears to be able to push through, but if they do, and if the bears slice through this 21 moving average to the downside, it can be a quick lookout below type moment where the bears are in control of the market and we're heading down in a big way. So that area, that 43.50 area, is a very strong area for the bulls to defend. And if they can, I would expect a bounce. Now, the bounce I would expect would be back towards the 44.25 area, about a 75-point bounce. And then I would expect down again from there, given the overall structure from the top. So we would look for a bounce back to 44.25 and then down toward 42.94 to complete wave 3. And then we look for a bounce from there to 43.90 and then down to 42.34 to complete the 5 waves down of the bigger degree. And that would be a very solid indication that the top is in and we are heading down in the C wave toward that 3,000 area we talked about last October. So it's pretty clear on the ES what we're looking for. The bulls need to hold 43.50. That is their line in the sand to the downside. If that breaks, we can see a kind of waterfall moment. If they can hold 43.50, then we would expect 44.25. If the bears can hold there and push down, then things get very bearish and the bears are in control of the market. If the bulls can push back over 44.50, then the bulls are in control of the market, whether it be a short-term high or a longer-term high. Over on the NASDAQ, all right, guys, on the NASDAQ, we talked about the fact that the move down should come into that 18,850 to 14,747 area. They got down 14,747, and I think they still have a little bit lower to go. The reason is their 200 moving, or their 21 moving average on the weekly chart comes in at about 14,500. So we could see the NASDAQ extend a little bit here and could possibly push the ES through its 21. So it'll be interesting to see how that plays out exactly. But the NASDAQ does have more downside to its 21 weekly. Whereas ES doesn't have as much. So we are at the target for NASDAQ. We would expect a bounce here, but a lot of times when they get this close to the moving average, they do come on down and touch it. So that would be an interesting to see how that kind of plays out along with ES. Overall, we're looking for a bounce on the NASDAQ as well. That 14,500 would be a big line in the sand. If they break below that, that becomes troublesome for the bulls. And we would look for an ABC back up toward this box in the 15,421 area up to as high as 15,666 if they're going to give us a bigger bounce. This would coincide with the pivot on ES, so I would expect the bottom of the target here at 15,421 to play out to kind of bounce with ES back toward its pivot, and then we would look for a strong move down in NASDAQ after that, and a 1 of 3, 2 of 3 type setup, and then a breakdown. So overall on the NASDAQ, as low as 14,500, below that is a red flag for the bulls and could be a potential waterfall moment if they slice through that. I don't think they will. And then after that, we're looking for a bounce back up toward the 15,421 area if they hold at that level or above. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It will take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial because I want you to get in there. I want you to love it and become part of our trading team before you ever spend a penny. You can cancel at any time. We also have our Elliott Wave for Beginners online course that is helping people understand the market. They finally understand targets, support, resistance, how to measure them, how to use other tools with them. It's 25 videos where I go over 3 different phases. First is the introduction, where we go over why Elliott Wave works, your mindset, and how to actually use it. The book Elliott Wave Principle is kind of the Bible, and it's great, but using it in real time isn't as easy. We make it clear and simple, and we make it so you can understand how to keep it simple with Elliott Wave and use it on the market. Then we go through the chart setup and tools, where we go through every single tool you need with your chart, how it works with Elliott Wave, and how it gives us an indication of what we're looking for, as well as the Elliott Wave for Beginners part, where we go through each wave, waves 1, 2, 3, 4, and 5, as well as how impulsive and corrective waves work, all of their targets, failure points, and everything you want to know so that you can understand the market instead of trying to decipher the news. The cool part about that is it is included in both membership rooms. So if you want to become a monthly member, you get it for free automatically. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where we go over exactly where we are in the counts and what to expect, as well as the trading material you just saw. We trade the SPY and the QQQ, and we swing trade, which means our trades can last anywhere from a few days to a few months. We don't trade quite as often as a day trading room does. However, if you are interested in day trading, as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as day trading, individual stocks, and PT's reduced risk binary moment that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures his trades. It's so unique. Something you kind of have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where you put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. Key takeaways for today. It's pretty simple. 4350 is a big number on the ES. If they break through that, that is problematic for the bulls. We would look for them to hold and push back towards 4425 and then down again for the bears. But if they do break out over the pivot at 4450, then the bulls are back in control of the market, whether it be a short-term high or a long-term push. Over on the NASDAQ, they can push down to as low as 14,500. Below that is a big problem for the bulls. We would look for a bounce back up toward the 15,421 area and then the start of a breakdown in C. If they do push back over the 15,666 area, that will be problematic for the bears. Guys, it's the weekend. Grab yourself a drink, enjoy your family, get away from the computer, have some fun, and I will talk to you next week.